This is Tom Aspray with the Viper Report. That's the market wrap video for the week ending September 9th, and it was a pretty interesting week. Only 4 days, but they packed a lot into it as the market held support and then rallied strong into the end of the week, causing some of those big put buyers to get worried. As this report from Sentiment Edge indicates, there's been massive put buying by the institutions. See, this chart goes back to 2000. Panic hedging was 3 times more than any extreme than 2008. Other data also supports this in articles in Bloomberg suggesting that a lot of hedge funds are very, very short going into this week. So it can't have been a great week. Let's look at some charts. See in the top here we have the VIX. Okay, so when the VIX is typically rising, okay, that's negative for stocks. Falling, it's bullish for stocks. We pointed out in the middle of June that it formed a top here, breaking down right in here. And so this looks to be just a rebound at this point. We got up to just short of 28 closed week. Below this, we have the S&P cash. It had dropped below 3,900 on Tuesday, opened there on Wednesday, and it's been off to the races. So we closed right in a confluence of resistance levels. We'll show you in a second. And so that makes the question whether this was a correction within a bottom formation or a rebound within a downtrend. Let's look at the weekly data first. You can see that advanced decline numbers were really strong. 2432 up, 1,000 down. And on Friday, the numbers looked pretty good. 2703 up and just 541 down. We'll get back to the level of buying pressure last week was almost as one-sided as it was the selling the prior week. Let's first look at the daily AD lines. You can see that the SPY, closed above the 50-day moving average in pink here, and above the 100-day moving average in black, and the 20-day EMA, settling just below the pivot, so that makes action early next week important. And typically, if this is a rally within a downtrend, this is kind of where they would run out of gas. You can see there's a bunch of resistance here between up to 414 in the SPY. But surprisingly, the AD numbers have been stronger than one would expect for a rebound within the downtrend. We hit the support level line B, moved above its moving average, and we'll be testing this downtrend if it goes much higher. Stocks only, it's still weaker, but it also closed above its moving average. NYSE all did not, but it's rising sharply. Looking at this a little closer here, you can see that this decline held the 61.8 support of this whole rally. That's sort of a key level. We got slightly below this last week, but then closed strong and back above the 20-day moving average. Another close-up of the AD lines here. But what's more startling, to me anyway, is the weekly. The weekly SPY chart shows you that the weekly AD line dropped back to the support and then closed back above its moving average. Does not happen too often, and so once again, next week's action will be pivotal. If we're to see another wave of selling, we can drop back below that moving average. Typically, with this and some of the turnarounds are like 30 ETFs that close back above their quarterly pivots in last week's action. Sort of supports an upward resolution here, but we'll be watching it closely. The NASDAQ 100 AD line has turned around nicely as well, moved back above its moving average. This is the key bullish divergent support. So far, so good there. If we get back above the September pivot at 310.71, that would also be a positive sign. That'd be regaining this former downtrend. As I pointed out before, the buying was quite strong. This is the S&P 500. Shows you that on right out of the gate here on Wednesday, the over 90% of the S&P stocks were higher, and also pretty strong on Friday. Even better on the NASDAQ 100, both on Wednesday and then on Friday, 94% were up. So that means basically of the NASDAQ 100, there were only 6 stocks that were lower on the day. This chart kind of reiterates the low level of bullishness from AAI investors down to 18.1%. And the National Association of Active Investment Managers also quite low at 27. So a problem for money managers and hedge funds as we get closer to the end of September. Of course, September has a pretty weak pattern until the end of the month, is that if the stocks close the month higher and good for the quarter, then their clients are not going to be happy if they have no long positions. So what typically would happen is they call a scramble that last week of trading to get back on the right side of the market so they look like they were bullish all along. With that evidence of the heavy put buying and high cash levels, it sounds like they aren't in that position at this point. As we started the week, the expected rally in the market looked like a good idea for a pullback in some of the short or the inverse ETFs like ProShares Short SH. So it came right down where it should hold now. I mean, the low, I guess, was 1524, right at the pivot, which is at 1528. So it sort of is on the knife's edge too. If it drops much further there, it will suggest that this was just a rebound in a downtrend. Where if it gets back above, say, the 1560 level, that would suggest that the inverse ETF is still in a positive trend. RS has pulled back to just below its moving average. OBV looks better after it broke out of a major formation. One of my favorite short-term indicators suggests that we could get overbought short-term early in the week. You can see this is the NYSE Advanced Minus Decline Oscillators. So it's a 5-day moving average. So when there are a lot more decliners, it gets really low here. A lot more advancers gets up here. So we went from minus 1200 up to plus 738. You can see these past peaks were like 1100, 1200 plus. A positive day on Monday could kick it up there pretty quickly. For futures traders, a pretty good week. We started off the week short from about 39.26, and we got reversed to the long side here on Wednesday at 39.67, and then hit targets at 39.80, 40.06, and 40.58. The high on Friday was 40.61. So we backed off to close it a little below that level, but it was a pretty good move to the upside there, and so our stop now has moved up to above the entry price, so that's always good. So having given up 41 points on that short position, we closed out on the 7th. We've added 142 in for a slight net of 100 points for the week. This is Tom Aspray again. Update from the Viper Report, 1 p.m. Tuesday. You can see from all this sea of red, markets were not happy with the CPI report. Came in hotter than expected. Dow is down 836, S&P down over 100. Russell's down 3%. Pretty much everything getting smacked, and the VIX has surged 7%. So not a pretty day. Market internals have actually gotten better. They were even more negative early in the session. As you can see from this 15-minute chart of the futures, it was a pretty ugly plunge, stopping out a remainder of our long positions, but we already hit the 3 upside targets, and the last position was stopped out for about a 40-point profit. So now we're short. And looking, as this chart would suggest, a rebound here. You can see one of the things I teach too is the fib retracement resistance levels, where you can target new positions. Not sure this is significant more than this week. Certainly this could put some downward pressure on the market. If you're not involved in stocks or haven't been for the summer rally and want to learn more about the markets, if you go to Viper Report, I would suggest you take a look, learning from the 2002 summer rally. Um, Reading it's a compilation rather of a bunch of my articles in Forbes. You can see, don't count on another rally failure. I thought we were making a bottom in here, and was looking for a rally. Is the rally over or just starting? Just starting. And we had nice move to the upside into August, and we profited from this. So each of these articles will tell you a little bit more about how to gauge them and how to trade. These were some of the stock positions we established on the rally. Treehouse Food took 11% on the one, 9 on the other one. DGI International was even a bigger winner, 16. We got out of this in the 30s eventually, and we had a couple of winners. We had a nice little short-term trade rather in Apple, and of course there are a couple of ones we got hit on. So if you want to learn about the markets, read this article. It should help you get started. You can go to Viper Report here or Viper Hot Stocks and join us. I think you'll be happy with it. We'll post another report next week. Hope you have a